What is going on, my friends? Ryan Williams here, back with another one. And as you can tell from the title of this video, I completely sold out of one of my dividend stock positions. And in this video, I'm going to share with you which stock I sold and the 4 main reasons I decided it was time to let it go. I'll be honest, guys, it was a tough decision to make, and I really don't enjoy the thought of selling out of any of my positions since my intent is to buy and hold them for the long term, but sometimes there are just better opportunities on the horizon. So that's what we are going to be talking about first, and then later on in this video, we'll get into a little Q&A where I'll be answering some of your guys' questions, like whether or not I plan to move my non-qualified dividend-paying stocks into my newly formed Roth IRA, and how I would suggest diversifying your portfolio between high-yield dividend stocks and high-growth dividend stocks. Anyway, before you're rocking and rolling, if the thought of living off of your dividend income gets you psyched, go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know when was the last time you sold out of one of your dividend stock positions, and which stock did you sell? Anyway, thank you so much for doing that, and now, without further ado, let's get into it. All right, guys, now for those of you who are up to date with my videos or are in the Discord group, me selling out of this company, which as you can see on the screen is Campbell Soup, is probably not a surprise. It's something that I've been talking about in the Discord chats a little bit. I may have mentioned it in my videos, maybe some of my recent ones, and maybe even in the comments of those videos. But I decided to officially sell out of this company. And before I tell you the 4 main reasons why, I would first like to offer some sort of disclaimer and say, for those of you watching this video who are invested in this company, please do not sell your position just because you are seeing that I'm selling out of this company, okay? But I decided ultimately, guys, it just wasn't a good fit for my portfolio anymore. I went through and revisited some of the financials, just took a look at some of the dividend stats, and really tried to think about what I want out of a dividend stock investment right now, and maybe where I could trim some positions and cut out some of the weakest links. And so concluding this disclaimer, guys, like I said, just because you see me selling it here or hear me talking about selling it, doesn't mean that it's entirely a bad stock. It doesn't mean it's still not a good fit for your portfolio. Really, you can only make that decision at your own discretion, as I did so here with my own portfolio. I say that because I know personally I've bought stocks because I saw someone else talking about buying it, and I probably have sold stocks, and I'm sure some of you guys have done the same just because someone else has sold it out of their portfolio. So I just wanted to clear the air there and, you know, really say that everyone's portfolio is different. Each portfolio has different needs, as does every investor. And this just seemed to be like a good move for me personally. So getting into the first reason I decided to sell this stock, guys, is, and this really is not the most important reason, but it is one to take into consideration. This stock has really done nothing in terms of share price performance, okay? I held this stock for probably about 2 years. And when I sold it, guys, I basically sold it for a 0% gain. And prior to that, guys, my position in this stock, I was down about 10% or so. Definitely wasn't doing too hot in my Campbell Soup position. But it had a pretty good run up in this last month, which is why I decided now might be a good time to sell it if I was going to do so. And getting into the specifics here, guys, in the last year, Campbell Soup is only up about 1%. In the last 6 months, it's up about 2.5%. In the last 30 days, this is where it's really shined. It's up about 5%. Okay, so maybe I wasn't down 10% in my position, but I definitely was down probably 5 to 6% if I am remembering correctly. But zooming out, guys, in the last 5 years, it's done pretty bad. Okay, it's down 25.5% in the last 5 years. But even as you can see, like it really tends to trade pretty flat, which would be okay if this stock had a lot to offer in terms of dividend income, like if it had a super high yield and you were buying it just for the income. I think that would be respectable and I'd be fine with that. I have some other stocks in my portfolio like that, like ORCC or EPD, who have a high dividend yield but really don't do too much in terms of share price performance. Like I'm buying those companies specifically for the high yield and for that high amount of cash flow. But the same cannot be said here with Campbell Soup. I really would have liked to see a bit more appreciation from this company. So that's reason number 1 I decided to sell out of it, guys. And moving on to reason number 2, I just think in general, the financials for this company are pretty weak. And we'll jump over and go through the income statement, the balance sheet, as well as the cash flow statement, and talk a little bit about the specifics there. And starting here with the income statement, guys, just taking a look at the total revenues. Just look at that. I mean, across the last 10 years, it's basically done nothing. I mean, 2013, they did $8.1 billion. And then just in 2021, they did $8.5 billion. So really not much movement. And in fact, in 2017 and 2018, they saw a pretty substantial dip in revenue. But with those years aside, guys, I mean, we can just look at this chart and see really not much has come of any sort of revenue growth from Campbell Soup. And the same can be said here with gross profit. Very flat, guys. Really not much movement. And I'm sure with consumer staples stocks, there is something to be said said for the stability, and because, you know, the revenue is stable, it's not like it's going down. The gross profit is pretty stable. It's not like it's going down, but it's not going up. And that's something that I would like to have in my portfolio, a company that is increasing its sales every year, increasing its profitability, which will then lead to more dividend growth and, you know, higher dividend yield over time, which once again, once we jump over and talk about the dividends, you'll see that that's really not there. Now, moving on, guys, jumping over to the balance sheet, I want to show you a few things on this sheet right here. So just starting with the cash, guys, the cash on hand for Campbell Soup is really diminished. We can see that about 10 years ago, they had $340 million in cash and equivalents. But guys, in the last report, August 2021, they only had $69 million in cash, which is quite a bit lower than they had the previous year, which they had $859 million. And then going back to previous years, they had $31 million and then $49 million, which is a little bit higher in 2018. 2017, they had $319 million. And there's really not a lot of cash on hand for this company right now, which is a bit concerning, especially if we scroll down and take a look at like the total debt right now, guys. So like total debt's $5.277 billion. That's a lot higher than the amount of cash that they have on hand. Anyway, scrolling down, guys, another thing that I really don't like about what I see on this balance sheet is the shares outstanding. I mean, it's not really going up, but it's also not really going down. And I mentioned in the intro to this video, sometimes there are just better things on the horizon. And I know there's other companies out there who, number one, have more cash on hand, especially in relation to the total debt. But number two, are buying back shares and have a solid share buyback program going. And so we would see this coming down. I just know that there's other companies out there who have that to offer. So that's another thing that I don't really like. And then moving on to the total debt, guys, we can see that we kind of talked about it already. The debt level is not ideal. Okay. Between 2017 and 2018, that debt really jumped up. I would imagine that is to make the acquisitions that we've already talked about, Snyder's Lance, Pacific Foods. I will say this to Campbell Soup's credit though, since they took on all that debt, they have really done a great job of paying that down, which probably, now that I'm thinking about it, is a reason that the cash reserves have been diminished so much. And also probably one of the reasons we're not seeing much dividend growth from this company, because they're working so hard to pay down that debt. So I will say that in defense of Campbell Soup, that is good to see that the debt is coming back down. So hopefully that makes sense, guys. Now scrolling up, we are going to look at the cash flow statement, and I will tell you what I don't like about that. Now scrolling down, guys, the issue that I have is with the free cash flow. Much like the revenue, much like the gross profit, the levered free cash flow is extremely flat. In 2012, they had about $630 million in free cash flow, and then jump forward, to now, they've only done about $100 million more in free cash flow for that year, $130 million more. So overall, the free cash flow growth is very flat, which it really isn't super concerning, because they're still left with a fair amount of free cash flow at the end of the day, at the very, very bottom line. And to say another thing, just in the defense of Campbell Soup, guys, the payout ratio, the amount of cash flow that's going to the dividend, is actually pretty safe, okay? I think it's about 50%. Like in the trailing 12 months, okay, $891 million in levered free cash flow, and then dividends paid out was about $450 million. So they're basically paying about half of their cash flow into the dividend, which is okay. They have some room to grow it and also continue paying down the debt, which they're doing a good job of. And this kind of leads me to reason number 3 that I decided to sell out of this company. It's because of the dividend stats. Now, although they have enough free cash flow to cover the dividend and then some, if we scroll up and take a look at the dividend stats, guys, we can see there's really not many redeeming qualities about Campbell Soup's dividend. I mean, the dividend yield is really not too bad. They have a forward dividend yield of 3.23%. Okay, that's okay. The forward dividend yield is really only one piece of the puzzle, guys. The payout ratio we already talked about. It's in a good spot, 53%, not too bad. But the 5-year growth rate is very low. Because they're paying down that debt so much, guys, they're not able to contribute more to growing the dividend at a faster rate. So we're seeing a really low 5-year growth rate with a dividend yield that's pretty average. And I'd be okay with this if the dividend yield was higher, like if it was in the 4+% range, 5+% range. I wouldn't mind seeing the lower 5-year growth rate, but it's not there. With that, I would like to be invested in a company that offers more in terms of dividend growth. And also, guys, to add to this, the dividend growth history is really not much to write home about. Only 3 consecutive years of dividend growth. But if we go over to the dividend history page, we can see that they do have a pretty respectable history of paying their dividend, 32 consecutive years of payments. And going back to kind of my overall theme with Campbell Soup is just that I think there's better opportunities out there. I think if we look at the dividend stats, guys, you guys would probably agree that's true. There's going to be other companies out there who maybe have a higher dividend yield, which is not my primary goal right now. But there's definitely going to be other companies out there who have a much higher 5-year growth rate, because I'm looking for some dividend growth. And other companies out there are going to have a longer dividend growth history, which basically is reason number 4 I decided to sell out of this company, guys, simply because I know there are better things on the horizon. I know that there's other companies out there who have more to offer than Campbell's Soup right now. If I was in a different position, like if I was getting closer to retirement and was looking for something more stable, I think Campbell's Soup has that to offer, because like we saw, they have a solid history of paying the dividend, although the growth isn't there. They've been paying the dividend. Okay, the revenue stays pretty consistent. The profits stay pretty consistent. The free cash flow stays pretty consistent. But I'm in a period right now where I'm looking for more growth from the companies that I'm invested in, both in terms of share price performance, okay, and also in terms of the dividend and also the financials. I'd love to see a company increasing sales, increasing profits, increasing free cash flow. So those are the 4 main reasons I decided to sell out of Campbell's Soup Company, and I hope they all make sense. If you guys have any questions or have anything you'd like to add to kind of my breakdown of this, please leave them in the comments below. I know there's some other Campbell's Soup shareholders out there that watch these videos, so I'd be very curious to hear your guys' thoughts on this stock. And with all of this said, guys, it begs the question, like, now that I've sold out of this company, what am I going to do, or what have I done with the funds from that sale? And I'll be honest, guys, I haven't made any moves yet. That cash is just sitting in my brokerage account, waiting to be deployed. I think that sale was about $1,600, so I have a lot of cash to invest, and I don't want it sitting on the sidelines for too long, because I want to put that cash to work. You guys know what's going on with inflation. That money is much better invested into some stocks right now that will appreciate in value or pay dividends, growing dividends at that. But honestly, guys, I'm having a really tough time deciding where to put it, and I won't say too much right now, but I do actually have my eye on one stock that I'm considering adding to my portfolio. I'm like very on the fence of whether or not I'm going to pull the trigger on that, but if I do, guys, it's going to be like in a matter of days, because like I said, I don't want that cash just sitting on the sidelines for too long. So I may potentially add one more stock to my portfolio, or I may just invest those funds into stocks that are already in my portfolio, or it's a very real possibility that I might do a combination of the two. I could start a new position in this mystery stock that I'm talking about, and I could also contribute some of that money to other stocks in my portfolio, maybe increase those positions. At any rate, guys, I hate to leave you hanging, and I hate to tease you, but you'll have to stay tuned for my next video to see what I ended up doing with those funds, because that I've already decided that's going to be the topic of the next video. Although I'm still undecided, I need to make a move. So stay tuned for the next video to see what I ended up doing, whether or not I added a new stock or whether or not I just contributed some to stocks already in my portfolio. All right, my friends, now we are going to move on and get into the Q&A segment of this video with our very first question coming from the Never Ending Highway, which was left in a comment here on YouTube. The Never Ending Highway wants to know, would you consider moving some of those non-qualified dividend sources into the Roth? That is where I like to put all of my real estate holdings so that the tax burden implications are sheltered while I let them compound tax-free until I'm like 60. And that's a great question. I actually think I touched on this a little bit in the video where I revealed the Easy Money Squared Roth IRA. I'm actually a little bit undecided on what I want to do there. And here's the dilemma, guys. There's 2 sides to this. Number one, there's a side that is like what the Never Ending Highway is saying. I could move those over. I would have to actually sell them, okay, contribute the cash to that new portfolio, and then rebuy the stocks. It'd be cool not to have to pay taxes on those, because the dividends that come in from those companies in my portfolio, which are going to be the real estate investment trusts like Realty Income or WP Carey, or the BDCs like Main Street Capital Corporation or Owl Rock Capital Corporation, ORCC, those are taxed at a higher rate than some of the qualified dividend paying companies, which would be like a Coca-Cola or a Procter & Gamble or an Altria Group or a Chevron, stuff like that. So by doing so, it would definitely be a good move from a tax standpoint. But then there's the other side of it, guys, which is this. I would not be able to touch that income really until I'm like 60 years old, like 30 years from now. And the issue with that, and this could be a deal breaker for me from moving those over, is that I really do plan on like utilizing this income long before I'm 59 and a half years old. If things work out the way that I plan them to, guys, like I'll be living off my dividend income, hopefully like before I'm even 50 years old. And so to do that, guys, I'll need all of the income that I can get in the taxable brokerage account. And if I was to move those stocks into the Roth, I would miss out on being able to utilize that income as time goes on, you know? So that's kind of the dilemma I'm having. I'm really not sure what I'm going to end up doing. The more I think about it though, and you guys might scold me for this, but the more I think about it, the more I'm thinking I might be better off in the long term keeping it where it's at and just sucking it up and paying the taxes on it. I know that the taxes suck, but like I said, I'm really planning on using that income before long before I'm 59 and a half. And that's me personally. Like I said, there's definitely two sides to this, definitely some pros and cons to each situation. Anyway, Never Ending Highway, that was a really good question. I appreciate you asking. It definitely made me think, and it's definitely one that I have to spend a little more time with before I come to a definitive conclusion. Moving on to the second question, though, this one comes from my good friend Kevin Burgess, who, if you guys have not done so already, please check out his channel. His name's right there. His channel name is just his name. And I really look up to Kevin, and I really appreciate his content because Kevin is someone who actually lives off of his dividend income. He has a really nice portfolio, and he definitely motivates me to continue on this path of dividend investing because he is living proof that it is possible to live off of your dividend income. But at any rate, Kevin wants to know, here's a question for you, and it's something I don't have a clear answer to. How should we determine the balance between high yield dividends versus high growth dividends in our portfolio? That's a really good question. And in short, it depends. Obviously, it depends where you're at, what your portfolio is looking like, and how it's currently allocated. And just so you guys know too, to clear things up, when we're talking high growth, I'm going to answer it in terms of high dividend growth, not share price appreciation growth, but high 5-year CAGR, okay? I think one of the biggest factors to determining the right way to balance it is how close you are to using that income to live off of. So like in Kevin's case, for example, who is living off of his income right now, he might benefit more from having more high yield dividend stocks in his portfolio because he needs that income right now. But me, on the other hand, who still has a considerable amount of time before I'm going to be living off of this income, I might be better off investing in stocks that have higher dividend growth. I mean, I have a mixture of high growth and high yield, but I might be better off with ones that have a lower yield today, but are doing a great job of growing their dividends over time. Because across, a number of years, when I get to the point where I'm going to be living off that income, if most of my stocks are higher growth stocks, well, I've had a ton of time to let those compound and let those grow, and I'll have established a pretty solid yield on cost by investing in those companies today. With that said, though, like I'm going to throw a wrench into my argument right now. Like if you had, higher dividend yielding stocks, you're going to be getting more in dividends now, which are going to then be reinvested, which could potentially help you compound that income quicker. So like I said, guys, there's just so many ways to approach that. But that's my take on the subject. Kevin, great question, man. And also keep up the great work. I'm really enjoying watching your videos and I'm really learning a lot. So anyway, guys, that pretty much wraps it up for today's video. We had a lot of fun filming this one today, I'm not going to lie. And I also feel a little bit of relief now that Campbell Soup is out of my portfolio. Anyway, before you guys click on to the next video, if you wouldn't mind doing me a favor, if you have not done so already, please don't forget to leave a like, leave a thumbs up, okay? Also, number 2, I would like to officially invite you all to join the Dividenders Discord group. And for those of you who don't know what Discord is, basically, guys, it's a messaging app. It's a free messaging app. And on there, we've got a group of dividend investors. I think we're up to about 330, 340 different dividend investors. And all we're doing is just talking dividend stocks. Everyone is in there sharing their portfolio, sharing what they're buying and selling every single week. They're sharing their analyses on tons of different dividend stocks. There's just a lot of really good conversations. So I would really implore you guys all to join. Like I said, it's free to do, and the link to do so is in the description of this video. You just need to click the link. It'll take you right there. It's super easy. But definitely check that out. I look forward to seeing you all in the Discord group and hearing about your portfolios. Anyway, guys, with that said, I will now get out of your hair. But thank you all once again so much for watching this video. I really appreciate you guys. And I hope you have a great day, and I will see you in the next one.